Hello, everyone, and welcome to the fundamental portion of the newsletter for August 30th. Today, I wanted to talk through something that I've been trying to get my head around for some time, and those of you in the chat room have probably seen me struggling with the challenges between fundamentals and quite honestly, just aping in and just buying whatever happens to be moving upwards. So, I really wanted to share my thoughts on, first of all, what this trend kind of looks like, at least from my perspective. And at the end, we'll talk through some of the potential trends that I think are, incoming or areas of potential hype and the mechanisms behind why those may be the case. I think just exploring the notion of enjoying the hype and enjoying the momentum of this market, which is most definitely a very different characteristic to what we've seen, since 2018. So let's kick right in. But it really is a new kind of market, and it's just about getting your head around that kind of that realm. So it's a bit of a new paradigm. So since 2018, we've seen four different market types, and us being in the fourth one at the moment. So during the bulk of 2018, through to that last capitulation in December, really it was get wrecked. It was anything that you bought would just get whack-a-mole back down. That we were still in this phase of ICOs that were the energy was there, but really the market had imploded at that point in time, and it really was a rush to the exits. And if you were anything like me, you didn't establish that it was a rush to the exits until much later in the piece. And really, that's where we head into the zone two, where Bitcoin really became oxygen. It sucked the air out of the room. So we had the capitulation down to in December. We then had about a 4-month period of consolidation below the realized price. And quite interestingly, during that time, even the on-chain analysts, the Willy Woos of the world, had not established that it was actually underneath the realized price, because the way that they were calculating it was somewhat skewed. I can't remember the exact mechanics behind it, but more or less, once we had that short squeeze that got us up above 4,000 was about the level, Bitcoin just took the air out of the room. And Bitcoin maximalism reached an absolute peak. Everybody was trying to accumulate as much BTC as possible, and alts just continued to sell off and bleed out. It was, you wouldn't want to touch altcoins. They were radioactive. They continued to fall relative to Bitcoin. And then we moved into this period of what I've just called alt anxiety. And really, this was that period after the sell-off. So we had the rally up to 14,000. And then we had a period of time where it kind of consolidated up there for a while, and it finally broke below 10,000. And it was more or less a miniature bear market from that point onwards, with striking similarities to what we saw in 2018. And it really culminated in that final sell-off down in March 2020. And I mean, to this point, really altcoins saw a little bit of movement, but really we didn't see any kind of hype or momentum, or there was never a trending market in all of this. And it really was only after we kind of broke up into that $10,000 range again with Bitcoin that the market started to regain its composure. And that's why this purple box here doesn't encapsulate a very large portion of it. And if you can believe that things like YFI, which is one of the most intriguing, I think, DeFi protocols, even that only launched a month ago. And the period of time that we're talking about, we've seen this movement in the Ethereum space, this DeFi explosion of price appreciation and new projects and things like that, and the recovery of dead projects, to be honest. This has really only been about a 2-month period. And it's interesting that it really took Bitcoin to reclaim that $10,000 level with conviction, which is a very, very strong signal. And, we've now moved into this great stair-stepping pattern that we've started to see this anxiety clear out, and some of these altcoins really start to get some of this attention. And we're starting to see somewhat of a trending hype-based market, which is exciting to see, especially for someone like me who's never seen something like this. Really what I want to talk about from here on is kind of my mental model and how I'm adjusting to this what is, to me, a new paradigm in the way we're looking at these markets. So no longer do we have to be so worried about playing whack-a-mole and every time you get a green candle you should be taking profits and getting out, because what we're starting to see is seriously trending markets, and trending markets over a period of a week or 2 weeks, where you're getting 100%, 200% type moves. So non-trivial trends that are lasting longer than just a couple of day swing trade. We're talking about a couple of weeks of sustained price action, and sometimes up to periods of months. And really, it's about getting into the right trends at the right time. and trying to pick where those are going to come up next. So this. I think, to be honest, this summarizes everything that's going on at the moment. I love this meme. It's the bell curve of intelligence, and really, you've got the cave heads on the left hand side who really do they just buy whatever's on moving. They don't think too much about it. They're just the degenerate side of things just jump in there and don't give it a second thought. You've got the Jedi Knights who are really just, they've done the research. They understand just by the thing, right? It's trending. The market has now changed. You could say the same about the stock market. There's lots of people who are thinking about the reality, the economy, and they're not realizing that it's just as simple as print goes up, right? You match the amount of stimulus that's going on to the stock market chart, and it's 1-to-1. So the super smart people really understand, and they're seeing where these trends are. They're seeing where the VC money is going, and quite often a lot of them are talking about these things on Twitter, and people are actively pumping their bags. And some of these really big names in the industry, the reality is they have large bags to pump, and it will pump. They will. So say with that what moral fiber you want. There is edge here in understanding who the big names are, and who's actually moving the market in these types of things. So. And then you've got, I'm going to say the unfortunate reality is me sitting here in the middle where thinking about, no, it's, this candle is overextended. The RSI is overbought. The thing's only been trading for 4 hours and you're talking about 100x gain and there's no fundamentals. The things are completely broken. There's no way this thing's going to survive. And unfortunately, there's me sitting there with, nothing to show for it. And, everyone sitting either side of the bell curve is on 28 baggers. So I think this is kind of the new paradigm that I'm certainly challenged to get my head into, and it's really only been in recent times that I've started to at least accept that this is part of the reality. Long term, yes, there'll be fundamentals that play into this whole thing, but I really do think that we are in a trader's market where really all we care about is price. The actual reality of a lot of these projects are more or less irrelevant as far as I'm concerned, because it just doesn't matter. I think in many of these cases there is looking for the trends, looking for the people who are, and the insiders who are really pushing these trends forward and really copying what their trades are actually looking like. So the likes of Three Arrows Capital, Suzu, and I think it's Kyle Davies is the other bloke. Some of the ETH thought leaders. I mean, to be honest, there's a lot of these people who you can more or less just follow and copy many of their, what they're talking about. And most of the time you'll be just fine. So that seems, again, this is all going to evolve. This market will change with time. Hypes will come and go, and there will be a relaxing over time. We're going to get these initial massive hypes where everything just moves, and then we're going to see a winding down as people start to work out the game, and eventually the game gets broken, right? This thing will not keep going like this forever. There'll be a exuberance phase, and then eventually all the yield will get squeezed out of the lemon. You get more and more scams, more and more clones, less and less quality, and eventually people just get tired of the game. So this is going to be part of the whole mix. So understanding where we are and that trend, it's hard to do, and I'm not going to profess to be an expert in it, but it's certainly something to be aware of, that these things will change over time. And the solution really does just seem to be to Ape In. Let your inner primate talk, think a whole lot less, spot the trends and the hype, and then just trade it, right? Don't get too attached to these investments. I think if you actually strip this thing back and you look at the fundamentals of many of these tokens, they're completely irrelevant and they're bogus and they're broken. However, price will still move and there is profit on the table, especially for the traders in the room. And a real value point of crypto is that most of the market is driven by raw emotion, by retail investors. As there's a few VCs moving the market, but most of it is just retail investors trying to throw some money on the table and see what comes out the other side. So, technical analysis works very well, especially on lower time frames. So I think that, you can use the skills that Doc is really teaching on how you actually track these markets and apply them fairly robustly to this market. So I think leave some of your inhibitions at the door, practice good risk management. And really, if you practice good risk management, the rest of it will come easily, right? Once you move into these trending altcoin markets, it becomes a little bit like throwing darts, where it doesn't matter which one you hit. As long as you're throwing darts, you'll be okay. And the idea is, as long as you're practicing good risk management, you know where your exits are, both to the upside and on the getting outside, then, really there's a lot of green candles on the table that you can take advantage of. So reality is, I tried this, and YFI is one of these tokens that just keeps going up and up and up. People are talking about it being the next Berkshire Hathaway of DeFi, and to be honest, there's some merits to it. The way that the project is being structured. Granted, I'm struggling to do a deep dive on it because there's so many layers and there's so much jargon and lingo to go with it. Everything's got Y prefixes, and there's strange tokens that are the construct of 20 different LP tokens, liquidity pool tokens, and all sorts of. It's not an easy thing to get your head around. That said, there is an interview with the creator of Yearn Finance on Uncommon Core, which is the Suzu and Hasu podcast. There's 2 episodes, one talking about the governance layer, one talking about how YFI actually works and the different products that he's built, that Andre Conje has built. So they're definitely worth checking out. So that's Uncommon Core is the podcast. But more or less, I saw this thing moving, and I felt compelled to just say, look, I'm going to just throw some money on the table and just see what happens. So I think bought the thing at 21,500, and the thing just kept going, right? And I've exited somewhere near the top there, 32 or something like that. So there's an immediate 30% move in all of this. So, we're not talking about big money here, but it was just an approach where I thought, look, this thing keeps trending. Everybody's talking about it on Twitter. So, roll the dice and see what happens. And, to be honest, I actually am expecting this thing to continue to trend higher. I'm waiting for a pullback at the moment. It could be left at the altar, but I'm expecting a pullback at some stage just because of the scale of this thing. But basically, the order book is so thin. And, really what my fundamental trade is here is that there's 30,000 units. Those 30,000 units are spread so thin across all sorts of order books. And there's way more people with BTC and ETH willing to buy it than there are people willing to sell it. So, with a very, very thin order book, the spreads are crazy wild. You're talking, $200, $300, $400 between bid and ask. And I just see green, orders coming on the Binance book all over the place. So to me, the thing is going to probably trend higher, and it's just a function of illiquidity and attention. So this is really the fundamental basis behind it, and there's money on the table for this thing. So how I'm thinking about this market at the moment. So the main market participants that are in here at the moment that are driving things are insiders. Now, I think that there's some new blood coming into the market, but I don't think we're anywhere near 2017 levels. We're seeing some exchanges starting to talk about, I think Binance, I saw the other day, had more support requests than during peak 2019. I think a lot of that is because their product line is much larger now. I don't think that's necessarily because there's more people. I think that's because their product line, they've now got all sorts of lending and margin borrowing and all that kind of stuff. So I think that there's a lot more attention in the space, and there's certainly new people that there were from 12 months ago. But more or less, the people who are here are people who have gone through that whole bear market that we just talked about and didn't leave. People who understood that there's some value here, and the market move is a lot of these VC types who are, invested in multiple projects, funding them from an early point, getting a lot of token distribution. And if they're not getting initial token distribution, the other thing that they can do is they know when these protocols launch and they know the game. And because they've got large pools of capital sitting there waiting to go, they can time their capital getting in and liquidity mining and all that kind of stuff to suit the same set of people. And we actually see this, there's a table I've got later on that looks at some of the token distributions. And you can see that there's a dominance in a very, very select number of people, which are most likely the same people. So either way, these people are heavily incentivized for number go up. And this is really the trend that you want to be jumping onto, is understanding what these insiders are doing and trying to catch those moves. That's really what we're looking for here. Crypto has always been somewhat of a gambler's paradise. I don't expect that to change in any way, shape, or form. And really, there's a lot of people, myself included, who are bearish, right? And have just don't understand how this thing particularly works. I think DeFi is fundamentally broken, but that doesn't matter because price is going up. And eventually, somebody's going to walk in like me and Ape In at $26,000 or $21,000 on a single token. And you're going to get these FOMO squeezes. And that's really what's going to happen, right? We're going to get this point where people just can't bear to sit on the sidelines anymore, and they just jump in. So I think this is kind of the market, and this is the way I'm structuring it. Is that there's people who are incentivized to move their bags. There are people who are willing to just gamble and throw money at things, right? The cave heads on the left-hand side. So you've got the Jedis, you've got the cave heads, and really all the people in the middle are the people who are going to get FOMO squeezed at the top. So, ideally you want to be catching all three of those, right? You want to be following the insiders, getting in when the degens get in, and then exiting onto the, the middle of the bell curve, the bulk, as they follow the trend. So that's really what we're looking to do here is try and track these particular trends. And I think the trick is keeping your wits about you. So yes, there's a lot of hype, and I think there's a balance between trying to establish some kind of rational decision-making framework, combining it with, on the left-hand side, we've got trend, right? So use technical analysis to your advantage, because really these markets are strongly emotionally driven. You can use technical analysis to understand price is the arbiter. Everything else is irrelevant. Follow price. The other thing is to try and spot themes. Look for particular things that are upcoming, or themes that you think are going to gain some kind of momentum. And I'll touch on some of them later on that I think are coming. But look for these themes that could potentially turn into the trend. And then within those themes, look for relative value. So there's going to be a whole bunch of these projects. And again, I wouldn't be applying a scientific method to this. I would be looking for other people who are doing the work, building tables of value and all that kind of stuff, and trying to pick out within a set theme, which of these tokens is undervalued. It could have simply be that the price is 2 cents and there's a unit bias. People would rather buy 30,000 of them than 3. It could be that their PE ratio is much larger. There's all sorts of things we can look at, but you're looking for some kind of edge as to a token that hasn't moved yet that probably should have. So that's just kind of my thinking on there, is just looking at things relative to their peers within those themes. That could potentially turn into a strong trend. And a good example of this was where Band Protocol, the other DeFi oracle, it moved because it was undervalued relative to Chainlink, assuming that Chainlink was at a good value, right? Assuming that that's where oracles should be. Band was undervalued, away the thing goes. So that's what you're looking for. You're just looking for relative value to its peers. Is there a network that's doing more or less the same thing, or is a competitor and is undervalued? So that's kind of the notion here, what we're looking to do. So I did a couple of just quick examples. There's a DeFi report that came out. This is my chart, but there's a couple more from a DeFi bankless report looking at Q2, and a few that I've kind of pulled down from Twitter as I venture through there. This one in particular is me looking at the degree of supply overvaluation. So if we have a token, and Zcash is a perfect example of this, and Decred as well, actually, both coins are going through getting to the end of their great inflation. So Zcash halves in November, Decred's probably just passing its great inflation, this period where there's a huge influx of coins that come in irrespective, right? They're going to be mined no matter what. Proof of work coins actually have an advantage and a disadvantage. Proof of work coins are very good as money because they have the unforgeable costliness. They're not equity, they are commodities, more or less. It imbues them with that expense. The challenge of that is that because the miners have an expense, they have to sell them. So what you will find, I suspect, is that proof of work coins will probably pump later in this cycle because they have a lot of overhead resistance to get through from miners who have been literally selling and burning energy to acquire the coins in the first place. ICOs and DeFi tokens and all this kind of stuff, on the other hand, cost nothing to create. They're more or less pseudo equity in whatever the protocol is. And if you start a company, you can create as much equity as you want. There's not actually any, aside from sweat equity, there's not really any cost associated with generating these tokens. Now, what this chart is looking at is there's the market cap as it is today, which is price times circulating supply. And there's what's called the fully diluted market cap, which is, let's assume that all of the coins that are currently held by the founding team and yet to be mined and whatever the distribution process is, vested tokens, let's assume that they all come to market. If they all came to market at the current price, what would the fully diluted market cap be when all those tokens are now in circulation? Now, if you have a token where, let's say there's 10% of the tokens in circulation, that means that the other 90% is still to come to market. So the fully diluted market cap will be something on the order of 10 times larger than what we have, than the actual market cap. So these bars here, on a log scale, by the way, I just took a snapshot of the top DeFi projects off CoinGecko, and I divide the fully diluted market cap, so the old coins have now been issued and sold, divided by current market cap. Now, the higher the bar essentially means that you've got more tokens, or let's say 100. That means there's 100 times the circulating supply that still needs to come to market. So that means there's going to be a significant amount of sell pressure coming to market in the future. And more or less, these projects tend to be severely overvalued. And that's really what this is trying to tell us. On the converse, if you've got a very, very low number, you've got the opposite of that, where you've more or less got the circulating supply is very close to the fully diluted supply. And that means that most of the coins are circulating and it's more of a fair value. And that's why you can see YFI is down there about fifth from the end. To me, that's actually a strong trade because it's telling me that the market signal, the market pricing makes sense. We're not getting some kind of founders dumping coins on the market that's skewing the numbers. It is, in fact, the market pricing the supply that's currently out there. And then if you go to the far end, where you're looking at Serum or MTA or reserve rights, a lot of these coins are held by the founding team. They're vested in various things. There's issuance schedules, there's miners, there's all validators, all this kind of stuff. So, this is just one layer to look at in terms of relative values. How much sell pressure are you expecting to come to market in the future? There's things like PE ratios on the left-hand side, and you can see that we're up, some of these projects even make Tesla look good. But more or less, we're still in that very, very high 300 years, 500 years. But this doesn't factor in the growth. There will be future growth that makes these multipliers much nicer. And for DEX projects, you've got things like relative volumes and all that kind of stuff. And there's a number of tools that are out there that you can use to track this kind of stuff. And if you go to enough effort, you can always build your own. But more or less, if you spot some of this kind of stuff out there in the wild, you can start building a bit of a library of potential tools and information sources you can use to make these decisions. And this is that table I mentioned earlier about token distribution holders, who's actually in control of these things. And you can see for most of these, if we're looking at the top 100 holders, you're talking about 85+%. The vast majority, the top 100 people hold most of the coins. And this just gives you an idea about, this is an insider's game, right? These are VCs, these are people who got in early, these are people who accumulated massive sums, either from the source, from the teams themselves. There's all sorts of layers to this, but more or less it's an insider's game and we're playing on their turf. And, what you're looking for, is edge. If there's any of these projects that happen to have a really fair distribution, that is actually that's a strong positive. And something to be aware of and keep track of. And these things will distribute over time. And the ones that do are actually, to be honest, going to get more attention longer term and have more chance of accruing and maintaining value. So I'm going to run through very quickly some potential trends that I think are coming. I'm going to be very honest to say that I've done very little due diligence on any of the projects that come up here because there's just so many of them. And there's almost a deep dive that needs to be gone into all of these things. The only one that I will probably spend some more time on in the coming weeks is YFI. It seems to be alongside SNX is kind of the one that makes the most sense to me. It is basically Berkshire Hathaway, the equivalent on DeFi. It's a yield farming, optimizing type system that tries to automate as much as possible, and then has another layer with strategies and governance layers and all that kind of stuff. But more or less, we can see that Ethereum fees are through the roof. And this is going to drive attention and things to these other projects, things that either optimize the current fee space. So that's things like YFI and Melon, which my understanding of these is that they're basically strategies like Set Protocol. You buy into one particular strategy, you spend the gas once, and the rest gets pooled amongst everyone else. So it more or less it's a strategy that gains yield, and letting the system, the protocol, other people, whatever it is, letting the system earn the yield rather than you spending gas on every individual transaction. So things that shrink down your workload. I know Loopring is some kind of exchange where it tries to offsite some of that data, so you spend less gas and things. And then there's gas tokens, which my understanding is that it's basically like buying an option on gas. So you consume the token for a predetermined amount of gas at a later point. So you can buy it at half the price, and eventually you can more or less sell the gas token as a trade when gas spikes and people demand it, or you can hold it for yourself to reduce your own gas fees. I think this one here Chai gas token works on 1 inch exchange, but again, there's lots of moving pieces to all this. There will be things like second layer technology. We saw the Amisago pump when it announced that it was moving Tether onto it, and it's building some kind of second layer. Scale, Matic. I don't know what any of these projects do, but I know they're doing something to do with second layer scaling. So pay attention to them. And the notion of faster and cheaper layer one chains. Now, Tezos is probably, it's interesting because the staking rates on Tezos just don't compete with DeFi. So no one's buying Tezos. They'd rather buy something in the DeFi space. But eventually there will be some kind of DeFi stuff that gets built on both Tezos and Polkadot. I think are probably the two main ones to keep an eye on. They're kind of the two primary chains that I think have some kind of attention built into them. And that's where people are going to start building, and then there'll be interoperability and all that kind of stuff that comes later. But anything to do with scalability that seems to have some kind of traction is somewhere where there's going to be a potential trend. Following on with Polkadot, there is going to be more movement and talk around the network. It's clearly just blown itself into position 6 or 5 on in the coin rankings very, very quickly. And there's a number of different chains. Kusama, I think it is. Kusama is basically Polkadot Lights, like Polkadot testnet. I don't fully understand how a project that is literally the testnet of Polkadot or a less stripped down version has much value, but there seems to be a community around it. So, we're seeing price gains there. Edgeware is another kind of DAO type system, which, to be honest, they've basically knocked off a whole lot of stuff that Decred's done and called it their own. I believe that they've got some kind of on-chain treasury. My understanding is that they've built, it's built by Parity, which is the same team that built one of the Ethereum clients and Polkadot. And my understanding is that they've actually, in order to actually get Edgeware tokens, you had to sign or lock up a certain amount of ETH or signal with a signature. And there's a thing called the Parity bug, which is about 306,000 ETH that the Parity team got locked in a smart contract. And unlike Ethereum Classic, the chain did not fork to release those funds. So they've been permanently locked there. And what you'll find is that 25.5% by my calculations of the Edgeware tokens were acquired by the Parity team who signed with those locked 306,000 ETH. And they also happen to be the people building a lot of the technology. So to me, this is them getting their money back, some kind of ROI, about $24 million worth at this point in time. So look, who cares about morality in this type of market? But, these types of Polkadot parachains, and we'll see more of them start to pop up. But I think Polkadot parachains are somewhere that we could see price momentum and trends, more or less because there's VC hype and money behind them. And interoperability. So we're seeing things like Ren trying to port coins, Bitcoin, across to the Ethereum chain, creating ERC20 tokens. I think Zcoin is now talking about doing it. Zcash is implementing it. There's a few different projects. Be very aware with Ren though. It will change with time. Again, all these things have to progress from centralized to decentralized. But they recently got found out that the team actually is custodying the 9,000 Bitcoin, $100 million worth. Rather than being custodied by the dark nodes or the pools or whatever their system is. They haven't progressed to that yet. So at the moment, if somebody wanted to hack or the team wanted to do an exit scam, they could walk away with $100 million worth of Bitcoin. So be very careful with these things. Remember that nothing actually works or does what it says on the tin yet. It may do in the future. But certainly exercise some caution when you understand these things, and just know that there is risk and admin keys and stuff involved in all of this. But I think interoperability and moving, it'll be beneficial for both the proof of work type coins and whatever protocols are doing that porting. So I'm sure there'll be many more of these, but it's just another one to be aware of and tracking. So to just break this down to a bit of a summary, really the trend is your friend. And this works both on a technical analysis perspective, trending, but also on a hype perspective. Look at where people are moving. Look at where the insiders in particular, expect the insiders to pump their bags, expect them to try and push prices higher. They have every incentive to do so. And incentive is what this market specializes in. If you understand incentives, then you'll be just fine. And really, hype has an expiration date. I'm already starting to get the sense that the DeFi pump is coming to some kind of a close. We've even seen things like the 1inch and the Curve DAOs release their tokens to a fairly lukewarm reception. We're starting to see more and more clones. People are getting tired of it. I think we're probably going to go through a phase at the moment where we do see a bit of a reset. I think there could be movement around scalability type things. There could be movement around the parachains, as I've said, some new hype that has VC money behind it. But I think there's going to be somewhat of something new will come around the corner. I think we're getting to the point where something new is coming, and the trick is to be aware of keeping an eye on what that could be. I think disconnect price and fundamentals. Price is the fundamental. And I think if you spend too long thinking about it, you end up doing what I did and buying at 21,000 instead of when I first thought about it at 6,000. So really let your inner primate roam within reason. And ultimately, if you practice good risk management and you treat this as a trader's market, then there's a lot of benefit and there's a lot of opportunity in this particular space. What I would certainly continue to caution against is worrying too much about actually, unless you're very proficient and you really want to understand how the DeFi farming and stuff works, I would be extremely cautious about actually undertaking it and participating in it. I think if you can participate in the price action, it is much more sane and safer than going through there's lots of bugs and things that can go to zero, things that can get locked in smart contracts. If you can trade these things on an exchange, you can have a stop loss. You cannot have a stop loss in most of the actual DeFi executions. And for those of you who saw that article I posted up, which is very much worth reading, called "Ethereum is a Dark Forest." If you punch that into Google, you'll find it on Medium. Great article. It's amazing seeing what's going on in the mempool. Basically, whenever there's a transaction that's high profit potential, automated market bots are literally copying the code within the 12-second block time, recreating it with their own addresses, and then issuing it with higher gas to try and basically snipe anybody who's trying to put through a profitable transaction. They put through one that's faster and basically ports that same trade to them. It's just amazing, right? And this is the world that we're in. They're not going to be sniping your trade, but it just kind of goes to show you how ruthless it's actually going to be. So I think at the end of the day, have fun, enjoy kind of the hype and momentum. Be conscious that there's going to be insiders who want to move their bags. Look for the next trend. Try and think about where the puck might be going. And at the end of the day, use price as the fundamental and trade the technical analysis in this market. And what we're seeing is that things are going much higher and higher and faster than anybody really expects. So that's it. That's my thinking about where we're at the moment. Look for the next trend. I think we're coming to the end of this phase. There will be more phases. Be very conscious of the DeFi GFC, which will probably happen at some point. There will be something that implodes. If Ren BTC walked away, I think that accounts for about 3% of all DeFi. That would send some protocols insolvent because a lot of that will be concentrated in a select few, Curve and other things. And if Curve goes insolvent, then YFI goes insolvent. There's all sorts of layers to it. It's complex. There's insurance protocols and stuff as well. There's probably a trend that's worth watching. But, this is just kind of my thoughts. And as always, grab me in the chat room if you've got any questions or if there's any particular projects or themes that you want me to look at in more detail. You can always just grab me and, we can work out what that is. Anyway, thanks for tuning in. Appreciate it. Cheers.